The year is 1945. World War II, a storm that shook the globe, has finally ended. America, victorious and brimming with newfound prosperity, turns its gaze inward. Families, reunited after years of separation, yearn for a piece of the American dream. And what better symbol of this dream than a home of their own? But the path to homeownership, paved with savings and loans, was often riddled with obstacles for the average American. Traditional banks with their pinstripe suits and marble halls felt out of reach for many intimidating institutions reserved for the wealthy and privileged. The average worker, the returning soldier, the young family just starting out, they needed a different kind of financial partner. They needed an institution that spoke their language, understood their aspirations, and offered a helping hand on their journey to financial security. This yearning for financial inclusion, for a system that worked for the many, not just the few, formed the fertile ground from which America Savings and Loan would emerge. It was a time of immense opportunity, a chance to reshape the financial landscape and empower ordinary Americans to build a better future. In the heart of this transformative era, a group of community-minded individuals came together, driven by a shared vision. They believed in the power of collective savings, in the potential of ordinary Americans to achieve financial stability. This wasn't just about profit margins and balance sheets. It was about building a brighter future, brick by brick, mortgage by mortgage. And so, America Savings and Loan was born. Its doors, unburdened by heavy mahogany or intimidating guards, opened wide to welcome the community. The message was clear. This was a place where everyone, regardless of their background or bank balance, could access the tools they needed to build a better life. The founders, many of whom had witnessed firsthand the struggles of the Great Depression, were driven by a deep sense of social responsibility. They believed that by empowering individuals and families to achieve homeownership, they were strengthening the very fabric of their community. This commitment to community, this dedication to making a tangible difference in the lives of ordinary Americans, formed the bedrock of America Savings and Loan. It was a promise etched into the very foundation of the institution, a promise to serve as a steadfast partner in the pursuit of the American dream. America Savings and Loan's mission was simple yet powerful: to put homeownership within reach of every hardworking American. They understood that a home was more than just four walls and a roof. It was a sanctuary, a foundation for families, a source of pride and security. And they were determined to make that dream a reality for as many people as possible. Their strategy was built on trust and accessibility. They offered competitive interest rates on savings accounts, encouraging people to save diligently for their future. They streamlined the mortgage process, making it less daunting and more transparent for first-time homebuyers. They provided personalized service, taking the time to understand their customers' needs and guide them through every step. Word spread quickly. America Savings and Loan became synonymous with opportunity, a beacon of hope for families striving for a better life. The institution grew steadily, opening branches in neighborhoods across the country, each one a testament to its commitment to serving the community. The American dream, once a distant aspiration for so many, was suddenly within reach. America Savings and Loan, with its promise of a home for every family, was transforming lives and reshaping the financial landscape, one mortgage at a time. The story of America Savings and Loan is, at its heart, a story of people. Visionaries like Eleanor Roosevelt, who championed social justice and economic empowerment. George Bailey, a self-made businessman, dedicated himself to building a banking system for everyone. And Sarah Jones, a tireless community organizer, saw the bank as a catalyst for neighborhood growth. Together, they made America Savings and Loan an engine of opportunity and progress for all. In the early days, America Savings and Loan was built on grassroots determination and a shoestring budget. The founders chose a modest storefront, welcoming neighbors with a hand-painted sign, "America Savings and Loan, your partner in building a better future." Local tellers greeted customers with a smile, explaining savings and mortgages in simple terms. Trust grew, neighbors shared their experiences, and the bank flourished as a true community partner. America Savings and Loan stood out for its deep understanding of customers' needs, especially working-class families. They simplified banking, offered free financial workshops, and even provided childcare during branch hours. These efforts built trust and made America Savings and Loan a true partner in the community. Their commitment extended beyond banking, supporting local teams, charities, and families in need. As America Savings and Loan's reputation grew, so did its reach. New branches opened across the country, each reflecting a commitment to accessibility and service. But rapid expansion brought challenges. Maintaining close-knit culture and core values became harder. Facing fierce competition and mounting pressure, leadership stood at a crossroads: pursue growth or strengthen community roots. The choices made now would shape the institution's future. America Savings and Loan, born in an era of technological advancement, recognized the importance of embracing innovation to better serve its customers. The institution invested in early computing systems, replacing cumbersome ledgers and filing cabinets with digital records, streamlining operations and reducing wait times for customers. These technological upgrades, though met with some skepticism initially, were gradually embraced by both employees and customers, demonstrating the institution's commitment to progress and efficiency. Beyond technology, America Savings and Loan sought to innovate its product offerings. They introduced the concept of Christmas Club accounts, encouraging customers to save small amounts regularly throughout the year for holiday expenses, fostering a culture of saving among working-class families. They also pioneered home improvement loans, providing accessible financing options for families looking to upgrade their homes, further solidifying their role in supporting the American dream of homeownership. These innovative products and services were met with enthusiasm by customers, solidifying America Savings and Loan's reputation as a forward-thinking institution. Their willingness to adapt and evolve to anticipate the changing needs of their customers kept them ahead of the curve in the increasingly competitive financial landscape. However, this drive to innovate also carried inherent risks. As America Savings and Loan ventured into uncharted territory, they encountered challenges in balancing their pioneering spirit with the need for prudent risk management. The seeds of future challenges were sown as the institution navigated the delicate balance between innovation and stability. The winds of change were blowing through the financial world, carrying with them both opportunities and uncertainties. The regulatory landscape, once a predictable and stable environment, began to shift, driven by a growing belief in the power of deregulation. Proponents argued that easing restrictions on financial institutions would unleash economic growth, leading to greater prosperity for all. For America Savings and Loan, these changes presented both a tempting opportunity and a potential pitfall. The loosening of regulations meant they could explore new avenues for growth, offering a wider range of financial products and services. They could potentially tap into new markets, attract a broader customer base, and expand their influence. However, this newfound freedom also came with risks. The safety nets that had long governed the financial industry were being dismantled, and the potential consequences of unchecked risk-taking loomed large. The leadership of America Savings and Loan, faced with these competing pressures, would need to navigate this changing landscape with caution and foresight. The decisions they made in this era of deregulation would have profound and lasting implications for America Savings and Loan, shaping its destiny and ultimately determining its fate. The stage was set for a period of rapid transformation, one that would test the limits of innovation, resilience, and the very foundations upon which the institution had been built. America Savings and Loan, once a community banking beacon, faced a new era of financial innovation and deregulation. Leaders sought growth beyond home mortgages, drawn to diversification's promise. By expanding their portfolio, they hoped to shield themselves from market swings. Some urged caution, fearing new risks. Yet, the drive to diversify set America Savings and Loan on an ambitious new path. The siren song of the construction and development industry proved particularly enticing for America Savings and Loan. Across the nation, new suburbs were springing up, fueled by post-war prosperity and the burgeoning American dream of homeownership. To the leaders of America Savings and Loan, this wasn't just about building houses. It was about building communities, about shaping the physical landscape of the American dream itself. They envisioned a vertically integrated business model, where they not only provided the mortgages for new homes, but also financed the very construction of those homes. They partnered with developers, offering loans for vast tracts of land, eager to capitalize on the seemingly insatiable demand for new housing. America Savings and Loan's logo, once found only on bank branches, now adorned billboards overlooking construction sites, a tangible symbol of their expanding ambitions. This foray into construction and development brought with it a new set of challenges and complexities. The success of these ventures relied not only on the continued demand for housing, but also on factors beyond America Savings and Loan's control: fluctuating material costs, labor shortages, and the unpredictable whims of the real estate market. Despite these uncertainties, America Savings and Loan pressed forward, their vision fueled by a mixture of optimism and a growing belief that they had found a winning formula. However, what seemed like a natural extension of their core business, helping families achieve homeownership, would soon expose them to a new level of risk and vulnerability. As America Savings and Loan ventured into construction and development, warning signs emerged. Accustomed to predictable mortgage lending, the institution struggled with project delays, cost overruns, and regulatory hurdles. Decision-making became rushed, and the culture of caution eroded, replaced by a sense of invulnerability. High-risk lending and relentless expansion disconnected the bank from its community roots, as ambition overtook prudence. As America Savings and Loan's appetite for growth intensified, so too did its willingness to embrace risk. The institution, once content with the steady returns of traditional mortgage lending, found itself drawn to the allure of higher profits promised by loans to riskier borrowers and more speculative ventures. The deregulation of the financial industry, while intended to foster competition and innovation, also removed many of the safeguards that had long protected both institutions and consumers. Loan-to-value ratios, once strictly enforced, were relaxed, allowing borrowers to secure loans for a larger percentage of the property's value, increasing the risk for lenders like America Savings and Loan. The prevailing economic optimism of the time further fueled this appetite for risk. Real estate prices were soaring, and the prevailing belief was that the market would continue its upward trajectory indefinitely. The idea that property values could decline seemed inconceivable, leading to a culture of complacency and a willingness to overlook warning signs. Emboldened by these factors, America Savings and Loan began to extend loans to borrowers with poor credit histories and insufficient collateral. They financed speculative developments in areas with questionable demand, betting on the continued boom in the real estate market. The institution, once a bastion of conservative lending practices, was now deeply entangled in a web of high-risk, high-reward ventures. The deregulation of the financial industry, intended to unleash economic growth and competition, had an unintended consequence. It flooded the market with easy money. Interest rates plummeted, and lenders, flush with cash and eager to deploy capital, became increasingly willing to approve loans with minimal scrutiny. Borrowers, enticed by low rates and readily available credit, took on larger mortgages than they could realistically afford, fueling an unsustainable bubble in the housing market. For America Savings and Loan, this environment of easy money proved both a blessing and a curse. On the one hand, it allowed them to rapidly expand their loan portfolio and attract new customers. They offered adjustable rate mortgages, or ARMs, with enticingly low introductory rates, enticing borrowers who might not have qualified for traditional fixed-rate mortgages. However, this rapid expansion came at a hidden cost. The quality of America Savings and Loan's loan portfolio deteriorated as they approved loans to increasingly risky borrowers. The institution, once known for its conservative lending practices, was now heavily exposed to borrowers who were highly sensitive to interest rate fluctuations and vulnerable to economic downturns. The allure of easy money had blinded many within America Savings and Loan to the potential consequences of their actions. They had become caught in a dangerous cycle of unsustainable growth, fueled by risky lending practices and a belief that the good times would last forever. However, the foundation upon which this growth was built was far more fragile than anyone realized. America Savings and Loan, once a pillar of tradition, was drawn into the high-stakes world of speculative investments. Lured by the promise of outsized returns, leaders pushed beyond safe lending into risky ventures. Mortgage-backed securities and distant real estate projects became the new focus. Veteran loan officers worried about these unfamiliar risks. But optimism and the drive for innovation drowned out their concerns as the banks sailed into uncharted waters. Fueled by easy credit and speculative fervor, the real estate market entered a period of unprecedented growth. Housing prices soared, driven by a seemingly insatiable demand. Developers, flush with cash from eager lenders like America Savings and Loan, rushed to build new homes and condominiums, often in areas with little pre-existing demand. The belief that real estate was a surefire investment became deeply ingrained, fueling a speculative bubble of epic proportions. America Savings and Loan, caught in the grip of this speculative frenzy, played a significant role in inflating this bubble. They readily financed large-scale residential developments, often with little regard for factors like local market saturation and long-term demand. They approved loans to borrowers with questionable credit histories and insufficient income, enticed by the rising value of the underlying collateral, the houses themselves. As the bubble inflated, so too did the profits of America Savings and Loan. Their balance sheets swelled with assets, mortgages, and investments that seemed to increase in value by the day. Bonuses flowed freely, rewarding executives and loan officers for their role in driving this growth, further incentivizing risky lending practices. However, this prosperity was built on a foundation of sand. The underlying value of these assets was entirely dependent on the continuation of the housing boom. Any downturn in the market, any increase in interest rates, any economic shock threatened to expose the fragility of this house of cards. And as the bubble grew larger, so too did the potential consequences of its inevitable burst. Despite the prevailing atmosphere of optimism, warning signs of an impending crisis began to emerge. Reports surfaced of widespread mortgage fraud as borrowers, enticed by easy credit and rising home prices, misrepresented their income and assets to qualify for larger loans. Appraisers, under pressure from lenders to justify inflated valuations, turned a blind eye to obvious discrepancies, further fueling the bubble. Within America Savings and Loan, some employees began to express concern about the deteriorating quality of the institution's loan portfolio. They pointed to the rising number of delinquent loans, the increasing percentage of borrowers struggling to make their monthly payments, and the growing number of foreclosures, particularly in areas where speculative building had been rampant. These warnings, however, were often ignored or dismissed by those in positions of power. The institution's leadership, blinded by their belief in the infallibility of the market and their own success, downplayed these concerns as isolated incidents, the inevitable byproducts of rapid growth. They argued that the overall strength of the economy and the continued appreciation of real estate values would outweigh any localized problems. This willful blindness to the growing cracks in the facade of prosperity would prove to be a fatal error. By ignoring the early warning signs and suppressing dissenting voices, America Savings and Loan set itself on a collision course with disaster. The institution, once a symbol of prudent financial management and community service, was now careening towards a precipice, blind to the abyss that lay ahead. As the warning signs of an impending crisis multiplied, a culture of silence descended upon America Savings and Loan. Dissent was stifled, and those who dared to question the institution's increasingly risky practices were often marginalized or silenced. The leadership, surrounded by yes men and driven by a mixture of hubris and fear, created an environment where challenging the status quo was seen as disloyalty and a threat to the institution's success. This culture of silence was reinforced by a powerful groupthink mentality. The institution's leaders, blinded by their shared beliefs and assumptions, became increasingly isolated from reality. They surrounded themselves with like-minded individuals who validated their decisions, creating an echo chamber where dissenting opinions were rarely heard, let alone seriously considered. Those who attempted to raise concerns about the institution's risky investments and lax lending practices were often met with resistance, hostility, or outright dismissal. They were accused of being negative, lacking vision, or worse, of undermining the institution's success. In this environment, speaking truth to power came at a high personal and professional cost. As a result of this culture of silence, critical information was suppressed, alternative viewpoints were ignored, and the institution continued down a path of self-destruction. The very mechanisms that should have served as safeguards against recklessness and groupthink, open communication, dissent, and a willingness to challenge assumptions, were systematically dismantled, leaving America Savings and Loan vulnerable to the approaching storm. America Savings and Loan began with a mission to serve its community and promote homeownership. But as the financial world changed, the institution lost sight of its core values, chasing growth and risky profits instead. Prioritizing short-term gains over long-term purpose, they sacrificed their founding principles. Their story is a cautionary tale. True innovation means balancing growth with core values and social responsibility. The seemingly invincible engine of the American economy began to sputter. The Federal Reserve, concerned about rising inflation, cautiously raised interest rates. This seemingly small adjustment, intended to cool down the overheated economy, sent shockwaves through the fragile ecosystem of the housing market. The era of easy money, which had fueled the real estate boom and blinded so many to the risks, was coming to an abrupt end. For America Savings and Loan, heavily invested in adjustable-rate mortgages and speculative developments, this shift in the economic tides proved catastrophic. As interest rates rose, so too did the monthly payments on millions of adjustable-rate mortgages. Borrowers, many of whom had stretched their finances to qualify for these loans, found themselves unable to keep up with the escalating costs. The once booming housing market began to cool, and then to contract. Prices plateaued and then began to fall, slowly at first, then with increasing speed. The speculative frenzy that had driven prices to unsustainable heights reversed course, leaving a trail of overvalued properties and underwater mortgages in its wake. For America Savings and Loan, the consequences were immediate and severe. The value of their mortgage portfolio, once their most prized asset, plummeted along with the housing market. The institution, already weakened by its high-risk lending practices, found itself teetering on the brink of collapse. Defaults soared, foreclosures spread, and America Savings and Loan crumbled. Panic sparked bank runs, shattering trust and paralyzing the institution. Desperate measures failed. America Savings and Loan spiraled toward collapse. A taxpayer-funded bailout saved the shell, but trust evaporated. Lost jobs, homes, and dreams revealed the true cost of greed. Regulators closed in, insolvency was undeniable, collapse imminent. Regulators seized, dismantled, and auctioned off shattered dreams. Fear spread, credit froze, and the crisis engulfed the nation. Recovery demanded reform, oversight, and a reckoning with past failures. History repeats, lessons forgotten, cycles of crisis begin anew. The story of America Savings and Loan may seem distant, but its lessons are timeless. Greed, fear, and the lure of easy money still shape our financial world, whether in old banks or modern fintech. When crises hit, it's not just numbers lost, but real people, families, workers, dreams. Remembering this story reminds us, the human element remains the weakest link, and the true cost of forgetting is always personal. The legacy of America Savings and Loan reminds us that a resilient financial system needs more than rules. It needs a shift in mindset. Profit must be balanced with ethics and social responsibility. Regulators must stay vigilant and empowered to enforce the rules. Financial institutions must act responsibly, knowing their choices affect real people, and citizens must demand transparency and accountability. Only then can we build a just, sustainable financial system for all.